right, hello everyone. I think we're all set to get started. Okay, so my name is Stephanie Siraj, and I am an analyst on Corporate Insights Bank Cards and Lending team. What you see on the left here is an overview of what we'll be discussing today. We're going to cover what the experience benchmark is, the methodology we used for that research, some snippets of the report results, and the survey results. And as a note, this is a condensed version of what we cover in the benchmark reports, so this is intended to give you a broad overview of our findings. Regarding questions, please feel free to post questions throughout the presentation in the chat that you can see on your screen, and we'll answer those questions at the end. Also, we will be sending these slides out after the presentation, so don't worry if you miss something. Okay, so first I'd like to briefly cover corporate insight and broadly outline what we do and how we do it for anyone who's not familiar with our research. Overall, we conduct different types of research and provide insights to our clients about their strengths and weaknesses, as well as the competitive landscape and industry trends. We provide 5 core services to our clients: monitor subscription research, experience benchmarks, custom research, user research, and quantitative research. Our monitor subscriptions are where we provide several different deliverables, such as monthly competitive landscape reports on specific topics, or quarterly matrices on deposit product fees and features. And our experience benchmarks are a comprehensive review of digital capabilities to identify strengths and weaknesses for each firm in the coverage set, as well as industry performance as a whole. And the last 3 services you see here are primarily driven by the client and what your needs are in terms of research. We cover a wide variety of industries in our monitor subscriptions and benchmarks, from bank to asset management to credit card, but today we'll be covering the experience benchmark for consumer banking. Our methodology is unique. We take on the perspective of your customer. So what the everyday consumer sees is what we evaluate. For those of you unfamiliar with our research, we review digital experiences, both pre and post login, which we refer to as public site versus authenticated site. So we review both publicly available information, like product fees or checking account comparison tools on the public site, as well as behind the login authenticated experiences, like making an external transfer. Across the company, we have access to over 700 live accounts from over 200 financial services and insurance firms. And you can see here on the left some of the firms we cover, like American Express, Bank of America, Chase, and Citi. Our analysts, people like me, review user journeys on these firms' websites and mobile apps over 750,000 times per year. So we are constantly in these websites, evaluating different features and keeping track of any experience changes. All right, so now we will move on to the experience benchmark for our bank monitor, and we'll cover the structure and methodology of the benchmark before heading into the findings. The experience benchmark assesses primarily the authenticated site experience for consumer bank account holders on websites and mobile apps. We then take that data and create reports to help our clients understand where they rank among competitors and outline the competitive landscape. These reports cover each firm in the coverage set and touch on their strengths and weaknesses, highlight the leaders in each category, and outline key findings. We publish one report for websites and one for mobile apps to properly compare firms within those platforms, which is why you'll hear me refer to reports plural. We do offer both off-the-shelf and custom versions of these reports. I'll be covering the findings from our inaugural 2024 studies today, which are currently available for purchase, but our 2025 benchmark will be released this summer and is available for pre-order now. All right, so what you see here is an outline of the topics covered in the experience benchmark. At the top, in green boxes, you'll see the 6 main categories we evaluate across both platforms, plus a 7th prospect experience category for website. The prospect experience category is the only true public site category that we look at in the benchmark, which is why we only include it for one platform. All other categories look at authenticated post-login experiences. Beneath each category is a collection of subcategories in those white boxes with green outlines. And each subcategory contains a series of smaller items that we call attributes. So, for example, the account servicing category, indicated by the number 1, includes the card security category subcategory, the number 2, which then includes attributes related to things like card replacement and card locking, which is the number 3. This framework maps actual customer journeys within the digital experience. And each category represents key touch points in the banking relationship, from routine account management to more complex servicing needs. As mentioned, the attributes review the functionality, design, and usability of consumer bank account holder experiences. So when reviewing and grading firms, we evaluate each attribute based on predetermined criteria before assigning an attribute a grade of poor, fair, good, or excellent. Grades from each attribute are then weighted based on results from a large-scale survey, which I'll touch on more in the next slide and later in the presentation. And those attribute grades roll into category scores that range from 1 to 100, and then ultimately roll up again into an overall platform score. And the table on the right shows how we classify different overall score ranges. We organize scores into 4 tiers: leading, achieving, effective, and trailing. Firms in the leading tier typically offer advanced capabilities, innovative features, and strong ease of use, whereas in comparison, those that are trailing have room for improvement in terms of features, functionality, and design. So now that we've covered the big picture, I just want to backtrack a little bit and explain exactly how we assign grades. So for each attribute, we develop a clear set of criteria, so that way there's not a lot of ambiguity when grading. And so we don't evaluate one firm more leniently or more harshly than others. So for example, the card security subcategory includes attributes for things like card replacement or disputes. And the card replacement attribute includes criteria measuring whether each firm includes a lost or stolen card option, a damaged card option, whether you can lock the card within the journey, review a list of recent transactions, et cetera, et cetera. So for that attribute, the number of features offered within the card replacement journey determines the grade. That said, we do not solely look at the amount of features and capabilities in the whole experience benchmark. The design and navigation category looks at different criteria that's aimed to evaluate clarity and structure more so than features. And similarly, in every category, there is an ease of use subcategory where we look at how easy it is to discover or use a selection of journeys. And those subcategories take on a very different structure from the rest of the benchmark in order to properly evaluate these trickier areas. All right, so as mentioned, we weight the experience benchmark using a consumer survey for deposit account holders. When we fielded the survey last year, we received over 900 responses, and we screened for respondents who are 18 years or older, have a checking or savings account, and have logged into their bank account within the past 6 months. We asked respondents to rate the importance of a wide variety of attributes and note how frequently they've used those features in the last 6 months. So you can see here on the right that account information carries the highest weight, as it was the most important category to respondents, followed by the money movement category. So we'll touch on the survey results in more detail later, but for now, we're going to move on to the firms covered in the benchmark and then cover some of our key findings. So for this benchmark, we reviewed the websites and mobile apps of 20 leading banks. We tried to cover a wide range of firms in this coverage set, including both national and regional banks, to identify leaders in specific areas. And we do reevaluate the coverage set each year in order to account for the changing industry landscape and incorporate any client feedback we've received. All right, so now let's dive into what we actually found in our analysis. The next section will cover our key findings across both websites and mobile apps, highlighting where banks are excelling and where there's room for improvement. We'll look at overall scores as well as performance in specific categories. And as a note, this will cover just some of our major findings and category previews, not the entirety of our reports. One of our more interesting findings is that most firms still offer more capabilities on their website compared to their mobile app. Looking at this graph, you can see that the coverage set scored lower on mobile apps for every category except design and navigation. The gaps are particularly pronounced in the account servicing and profile and settings categories. Account servicing shows extreme variation with scores ranging from 18 to 88 on mobile and 19 to 89 on website. And while these findings look at the industry as a whole, firms that are seeking to improve their mobile app experience could benefit from a closer look at these categories. Account servicing can be really important to consumers, as a lot of the items within that category review features that customers will engage with after a stressful event, like losing their card. And key moments like these can really enhance or fracture a customer's trust in their bank. For profile and settings, we do find that consumers really value the ability to manage their accounts and seamlessly update their personal information, like their address, online. Differences between platforms matter because customers increasingly expect consistent experiences across channels. When functionality varies significantly between platforms, it can create confusion and frustration when users think they should be able to complete a task but can't. All right, so we found that all but 6 firms perform higher on the website benchmark compared to the mobile benchmark, largely due to the amount of features and capabilities on their website. So on the right here, you can see the difference between the website and mobile app scores for each firm in our coverage set. Some firms have very strong cross-platform consistency, like Capital One, Chase, US Bank, and Truist, with scores that are almost exactly the same on both platforms, while others, such as Bank of America and Chime, vary more in their scores, suggesting that they provide very different experiences on one channel compared to another. Bank of America does better on web due to the sheer amount of information, resources, and capabilities it offers on the website. For example, Bank of America struggles a little bit in account details on mobile when it performs excellently in that subcategory on web. At the time of this review, users also could not make external transfers on their mobile app, which created a noticeable difference in that category between web and mobile. In contrast, Chime is extremely mobile focused, to the point where sometimes if you click on a feature on their website, it will tell you to download the mobile app to perform that task. So there's a lot of capabilities on Chime's mobile app that are simply not available on their website. And in previous user testing, as I mentioned before, we've heard from customers that anything that they can do on the website, they expect to be able to do on the mobile app, and vice versa. So we wanted to highlight this because gaps in functionality between platforms can cause confusion for customers who don't see the two platforms as distinctly separate. All right, so looking again at the industry at large, firms performed best in the account information category while kind of struggling in the profile and settings category. Bank of America and Truist are the leaders on desktop for account information, while on mobile, US Bank heads the pack. Firms scored best in the statements and documents subcategory, while scoring lowest in the financial planning subcategory. And while our consumer survey did support these scores with how important respondents believe these features are, younger consumers actually showed much more interest in financial planning tools than older customers, suggesting that this could be an area we want to watch moving forward. And Chase, Bank of America, and Truist have all expanded their financial planning offerings within the last year or two, which definitely helped them in this subcategory and positions them well to attract or retain younger consumers who really value these tools. All right, so now we're going to get into the overall scores for web and mobile. So what you see here is how banks performed overall in our website evaluation. Bank of America stands at the top, being the only firm to reach the leading tier with a score of 81 out of 100. Chase and Truist also land in the top 3 with scores of 78 and 77, which, while they don't reach the threshold for our leading tier, are not very far off from Bank of America. So the top 3 firms are all very close in score. So there's very little difference there. The competitive set average is 64, with 60% of firms placing in the achieving tier. Many firms do fall into the mid-range with scores in the 50s or 60s, and this suggests that while most banks offer effective digital experiences, there's still significant room for improvement, particularly for those firms in the lower tiers. Only one firm fell into the trailing tier, which is pretty encouraging as it suggests that most banks are meeting basic customer needs. However, the gap between top performers and the rest of the field indicates that there are opportunities for firms to differentiate themselves in this space. Also, just as a quick note, we'll be sharing firms' scores here and on several of the following slides. And if you have questions about specific firms' scores, please feel free to reach out after this presentation, and we'd be happy to have a conversation around those items. Our contact information, if you're interested, will be on the last slide. All right, so turning to mobile performance, we see some interesting shifts in the competitive landscape. Truist actually takes first place with a score of 78, followed by Chase at 77 and US Bank at 76. So again, there's very little difference between the scores for the top 3. The industry average of 62 falls in the achieving tier, though it's worth noting that this is 2 points lower than the website benchmark average. Notably, no bank achieved leading status in the mobile benchmark, which highlights the potential challenges in delivering exceptional mobile experiences. And as a whole, the industry is split relatively evenly between the achieving and effective tiers. And unlike websites, no firms fell into the trailing tier on mobile. So this more compressed scoring distribution suggests that while banks have mastered basic mobile functionality, there's still a lot of potential to create truly differentiated mobile experiences where firms stand out from the pack. All right, so diving into the account information category, we see that Bank of America and Truist tied for the lead with scores of 81. This category consists of 5 key subcategories: account details, account activity, statements and documents, financial planning, and ease of use. Nearly 89% of bank site users rated account information as very important or extremely important, which is why this category has the highest weight when factored into overall scores. Looking at the distribution of scores, performance across the industry matches consumer preferences, with 15 firms achieving scores of 65 or better. Okay, and here you'll see a heat map that includes the rankings for each firm in each subcategory for account information. We wanted to include this chart for just this category to better illustrate how the scores and rankings can be analyzed. The subcategories on the left are listed in descending order of importance. You'll also see some ties throughout whenever firms receive the same scores. So for this, it can be really interesting to compare a firm's rankings here to their scores, which you'll see on the next slide. So for example, Capital One, which you can see their scores outlined in that little orange box, ranks lower in the statements and documents subcategory compared to the financial planning category, which we'll take a look at the rankings on the next slide, these are the rankings. We'll take a look at the scores on the next slide. The scores are higher in statements and documents compared to financial planning. And this tracks with what we see in the industry across the coverage set. So it's just harder to get a higher rank in statements and documents because more firms perform well in that area. All right, so now we're going to look at two subcategories in this category. We're going to look at account details and account activity. Okay, so looking at one of the leaders in the account details subcategory, Ally holds the top spot here. And this firm excels by presenting key account information directly on the account activity page. Their interface features two key elements that really set them apart. First, a summary section that displays important account, balance, and interest details by default. And then second, they provide helpful tooltips that explain each term when users hover over them, creating a clearer user experience. The expandable account details section also houses numerous additional details, including items like overdraft coverage enrollment. And this sort of layered approach to information presentation, where there's a hefty amount of info within a hidden display, really helps maintain clarity and a clean interface while providing access to deeper account insights when needed. Bank of America and US Bank lead in account activity capabilities. Both institutions present clear displays covering at least 24 months of history and encourage engagement through multiple calls to action. US Bank particularly stands out with its straightforward display. Users can also recategorize transactions and, importantly, apply these changes to both retroactive and future entries. And this kind of flexible categorization is increasingly important for budgeting and financial planning, which, as we mentioned, is a growing focus of younger consumers. Bank of America differentiates itself with a unique reconcile option. While most firms offer basic dispute and history export functions in their account activity, Bank of America's reconciliation feature actually lets users actively indicate whether they recognize transactions, adding an extra layer of client-driven security and account management. All right, so the previous two subcategories we looked at were based on our website data, and now we're going to take a look at a mobile category and its subcategories. Turning to account servicing on mobile platforms, we see Truist leading with a score of 88, followed by USAA at 84 and US Bank at 81. This category evaluates four key subcategories: management options, card security, requests and orders, and ease of use. It's worth highlighting that disputes are the most important feature in this category, with 80% of survey respondents rating them as highly important. And a lot of the items in this category revolve around services that users will engage with after they've been the victim of fraud or had some sort of scare around their account, like losing their card. And while users may not engage with these services frequently, it makes sense that they would consider them, especially the card security features, very important, as you don't want to have to struggle with your bank's website during a stressful event. What's also particularly notable is the extraordinary variance in scores, where they range from 88 to 18. This represents the widest performance gap we observed in any category, suggesting significant opportunities for improvement at many institutions. And firms may want to improve in this area to enhance customer trust and satisfaction, particularly in these critical moments where there has been fraud or card loss, when the experience can significantly impact customer loyalty. All right, so the management options subcategory covers things like general management and settings, such as overdraft coverage, and different types of controls like PIN management. SoFi and USAA excel in providing a streamlined, user-friendly experience by consolidating a wide range of services and controls in dedicated interfaces. SoFi offers features like overdraft protection and joint account management, and uses icons and a card image to make navigation clearer. USAA takes a similar approach, using icons for key actions and displaying detailed card information, including the number, expiration date, and CVV, which you can't see here because they are redacted. They also use color and icons to create a clear visual hierarchy. Both firms enhance discoverability by providing easy access to resources directly from their account dashboards, ensuring users can quickly find and utilize these available features. Bank of America leads in the card security subcategory with a unified interface that brings together card replacement, card locking, disputes, and spending controls. Their approach stands out for several reasons. They offer a transaction list in the card locking journey to allow users to check for fraud. Card locking details are clearly presented, which you can see in the first screenshot. And daily ATM and spending limit settings provide a more granular control for users looking to manage their spending, which you can see in the second screenshot. Truist also excels in this area with their card controls interface. Users can set location restrictions, block international purchases, set transaction limits, and track dispute status through their dispute tracker. This comprehensive, consolidated approach to card security reflects growing consumer demand for control over payment options. And Truist does particularly well in the clean, straightforward way that these options are laid out. All right, so now that we've covered the benchmark findings, we're going to touch on a few of the results from our consumer survey. As mentioned previously, we use the results of the survey to weight the scores of our benchmark and contextualize the results in our reports. All right, so some of the information here is really just a refresher from earlier. We received over 900 usable responses to our 2024 survey. And in the second bullet on this slide, you can see the inclusion criteria for our survey. We asked respondents to rate the importance of digital features on a 1 to 5 point scale, where 1 was not at all important and 5 was extremely important. You may hear me reference top 2 box importance ratings over the next couple of slides, which means the combined total of people that answered that a feature is very or extremely important, which was a 4 or a 5 on our 5 point scale. And based on those responses, we weighted the experience benchmark scores. As a note, we also asked other types of questions, such as level of satisfaction or login frequency, in order to gain more information about how people feel about their accounts and how they engage with different features. So here is a brief overview of the demographics for respondents. On the right are breakdowns for age, gender identity, and annual household income. We did combine the baby boomer and silent generation just because there were so few silent gen respondents. So just a note that references to boomers include anyone born before 1964. We also grouped income into 3 buckets: under 40,000, between 40,000 and 80,000, and over 80,000, just to make it easier to talk about in this presentation and our benchmark reports. Overall, satisfaction rates were high between platforms, with the vast majority of respondents being somewhat or extremely satisfied. For website users, boomers were the most satisfied with their bank's digital experience by a noticeable margin. Similarly, for mobile, Gen Z respondents reported the lowest satisfaction compared to other age groups. This suggests younger users may have higher expectations for digital services and that app capabilities may become more important as Gen Z grows as a customer base. Mobile-first banking is clearly the direction we're moving in, but the transition isn't uniform across age groups. So looking at platform preferences, we see pretty clear generational differences. Gen Z leads in mobile adoption, with 59% preferring the mobile app versus just 37% favoring the website. And this mobile preference gradually decreases with age, though interestingly, mobile app preference has grown among boomers by 9 percentage points since 2022. And mobile users also show higher engagement, with 36% logging in daily compared to 28% of website users. This higher engagement rate suggests mobile platforms are becoming the primary banking touchpoint for many customers. When we asked users about the importance of various features, some clear priorities emerged. Account information leads across both platforms, with about 90% of users rating it as highly important. And money movement and account servicing follow as the next most critical categories. However, we see some interesting platform differences in design and navigation and support, with mobile users placing higher importance on these aspects. This data directly informed our category weightings in the benchmark, ensuring that our evaluations reflect user priorities. Okay, so to summarize, leaders in this industry excel in the key aspects of the digital experience, such as card security, card controls, and account management. The top performers are mostly the same for both the website and mobile benchmarks, suggesting that these firms offer robust experiences and do well in cross-platform consistency. Mobile apps have the most room for improvement in most aspects of the digital experience, as they generally scored lower than websites. As far as the survey, younger users generally favor mobile apps, and mobile users log in more frequently, suggesting that younger users are more engaged with their bank. And of course, despite the differences we saw between generations, overall satisfaction rates for both platforms are high. All right, so now that you've seen everything that we wanted to show you today, I'd like to move into the question and answer portion of our webinar. So we'll be answering questions that you've posed throughout the presentation, and feel free to add any others that you may have now. So let me just take a quick look at the chat to see what we've got. All right, so someone asked, is there a correlation between channel preference and income affluence? No, I don't believe we saw that here. However, we don't have specific firm by firm data. So we were looking at sort of a broad spectrum of people, the general population. So this very well, there could be a correlation between channel preference and income or affluence for specific firms' customer bases. All right, so were we surprised by how low the supposedly high-tech banks did in the studies, like Chime and SoFi? I think a lot of us were, actually. However, we know that fintechs tend to do certain things really, really well, like account opening or account funding. And these benchmarks do look at the overall experience, the overall digital experience. So it does make sense that while they may do particular things very, very well, they may not have as comprehensive or robust an array of digital features as some of the incumbent firms. Will the slides be available after the webinar? Yes, they will. We will be sending them out after this presentation. Is the rest of the data, money movement specifically, only available by purchasing the report? Yes, the data that we did not show here today is included in our reports that are available for purchase. If you're interested in that or in specific firms' scores, please feel free to reach out to us and we can set up a conversation to talk about that. Do you also have a survey of private bank or wealth application? That's a great question. The firms covered and the accounts covered in this benchmark are primarily for everyday consumer bank accounts. Accessing wealthy clients' accounts is a little challenging, but we are looking into that for the future. But these benchmarks focus on everyday consumer accounts. However, we do, just to go back to that real quick, we do look at we do field surveys and conduct different forms of custom research with high net worth participants in some of our custom spheres. So while that's not covered in the benchmark, that would be something that we could do on a custom basis if someone was interested. Does the mobile engaged metric include transactional-based activity, i.e. paying with the phone more prevalent? That's a great question. We did ask respondents how frequently they performed certain tasks. So how frequently they made an internal transfer, an external transfer, how frequently they locked their card, things like that. So yes, but we are relying on self-report data there. So it is whatever the participant thinks that they did. We have 2 questions related to small business or small business related items. Do you have something similar for small business? And are there benchmark studies for merchant services? We do not currently offer a syndicated report for small business. However, that is something that we've done on custom bases. So if you are interested in that, feel free to reach out after this presentation, and we could connect you to the right people there. But currently, we do not offer a syndicated version of this benchmark for small businesses at this time. Could the difference in generations usage be due to the fact that younger generations are less likely to have higher balances and they need to check more often? Yes, definitely. That's certainly one possible explanation for why we had a generational difference in our survey data. And that would actually feed into the results we found for financial planning, in that younger consumers are seemingly more interested in financial planning tools. They might be more interested in those tools because they have lower balances and need to monitor their money more frequently. So short answer, yes, but that is an interpretation of what we have. How is usability assessed in addition to features provided? That's a great question. So every category has an ease of use subcategory where we look at what we consider usability for a selection of customer journeys. And in those specific attributes, we actually look for flaws in the journeys. So if there's too much text and it's too close together, that'll bring a firm's score down for those specific attributes. As a note, we do not assess accessibility and accessibility tools. That is not something that we cover in these benchmarks. Is the survey data available for purchase? Yes, it is. It can be part of the benchmark package you buy. Given how frequently customers are using digital, is a 6-month look back still appropriate for filter criteria? That's a great question. Yes, we actually, prior to these benchmarks, we conducted a lot of large-scale consumer surveys, and we actually asked customers about their last 12 months of behaviors related to their bank accounts. We found that customers weren't very confident in their responses. It was hard for them to think that far back. So that's why we went with a shorter time frame for frequency data in the benchmark survey. Earlier, you mentioned a nod to customers who see the desktop mobile experiences as one platform, expecting the same functionality. Curious how many of the surveyors fell in that category. That's a great question. And I don't think we have an exact number for you based on our survey, but we have seen that those kinds of statements repeatedly when we're doing user testing. So we have an in-house UX department who runs a lot of UX studies, UX interviews with consumers, and that has been a recurring theme that we've seen throughout the last few years where everyday consumers don't really see the different platforms, website and mobile, as separate. So we've gleaned a lot of insights there from our UX testing. All right, I believe that's all the questions we have. So I just want to reiterate that we'll be sending these slides out later today, but please feel free to reach out if you have any additional questions. We may reach out to provide answers for anyone whose questions we weren't able to get to today. So if you submitted a question that we didn't answer, please keep an eye out for that. Or if you have any questions that you think of later, please feel free to reach out. Also, as one last note, I want to restate that while this presentation covered our 2024 bank experience benchmark, we will be publishing the 2025 bank benchmark this summer with updated information that will include year-to-year changes. So thanks everyone for attending, and I hope you enjoyed our presentation today.